Hey, this is Kenny with Keller Williams Realty, coming to you with another weekly video. Thanks for tuning in. I hope everybody's having a great week. And I just wanted to talk a little bit about the current state of the market, what's going on, what could we maybe expect in the near future. And so I want to jump right into it. And so I have a few websites pulled up. I got Realtor.com pulled up. I've got Bankrate.com pulled up, and I clicked to a few of their articles about the interest rates currently and what's driving that, what's driving those interest rates. So, um, as you may have heard, the Fed, the federal bank, is planning on raising rates, raising interest rates, and the proposed um, first rate hike was proposed to be in March. So since like last year, um, the rates have kind of been raising. The mortgage rates have been raising, kind of in anticipation for that. The market the interest market, the bank market has kind of been raising their rates in anticipation for that. So let's go over here, kind of give a visual. So today, the national average is 4.24. Now, some of you guys might remember the rates in the threes, and all of that stuff. So we're going up a little bit now. And let's see, for today, Wednesday, February 23rd, this is for the 30-year loan. You know, most people get that. You know, obviously you can get 15 and 10 years and everything like that, but that's kind of the standard that we kind of measure it on. 4.24 is about the same from last week. Um, let's see. Why do mortgage rates top 4%? Okay, so it happened faster than predicted, but it's because they're raising rates. And let's see, there's plenty of subpar interest rates if you shop around. So this is one site that you might want to check out if you're looking for a mortgage. This bank rate, they kind of compare different lenders and stuff like that. So you might be able to, find someone with a lower rate and everything like that. Let's see some of the analysis there. More than a decade of chronic underbuilding and millions of millennials moving into the home buying stage. So kind of like everything at once, they're talking about supply has created a difference, the imbalance between housing supply and demand. So um, the combination of not building houses and then you know certain parts of the demographic coming of age and jumping out there. Um, let's see, while rapidly rising mortgage rates may temper the demand somewhat, don't expect home price appreciation to come to a halt. More modest pace of appreciation is the likelier outcome. So what's happening now is home sales are actually picking up now because people know that the rates are about to go up. So people are trying to get in. Also, home prices are appreciating. So some people are, the numbers are showing us that there was a strong, end of the year, December, January numbers because people know that the interest rates are going to go up, and that lessens what you could afford and makes your loan and your home more expensive. So some people are trying to get in right now before it kind of goes up. But when it goes up, it's also expected that maybe some people might be priced out of the market when the interest rates rise, and if you were just like barely making it, like with your budget as far as what you could afford, like you may be priced out when the interest rates raise. I was reading somewhere that from like 2020 to now, like the average um, monthly payment has raised like $200, and that's because of the obviously the home prices rising, but also the interest rates steadily rising from back in 2020. all the way to now. So let's go back to Realtor.com. So January existing home sales rise to 12-month high of 6.5 million. So this is the whole country. So 6.5 million. Existing home sales rose notably. I'm not going to read all of this, just going to kind of skim through it. Home sales marked the fifth straight month of above 6 million. Okay. And somewhere they say that the South is really hot. I'm trying to get to that part of it. Housing market momentum will be tested by rising mortgage rates in 2022. The major question is whether rising rates will quench housing demand that stems in large part from demographic tidal wave of young households at key home buying ages. So far, buyer activity has been resilient to the extra cost of home ownership, even in the face of factors that could shift or squeeze home budget priorities, including a fading pandemic mindset and inflation pressures. Our expectation, this is what Realtor.com thinks, and they're like chief economists. And they put out like weekly economy videos. I put them on my Facebook sometimes, but it's like little 2 minute videos, just how the economy is doing, how the so the how the economy is doing overall, how like the job market is doing, how the real estate market is doing. So I always try to catch them. Like I don't always watch them, but I think they come out like every Thursday or Friday. It's like a little 2 minutes, and it tells about like America overall, and it'll tell what's going on with the pandemic, what that's doing, what's driving the market up, down, the mortgage rates up or down, all this kind of stuff. So our expectation is that we'll continue to see home prices at a relatively high level throughout 2022 as post-pandemic shifts like rising workplace flexibility enable would-be buyers to expand. They're saying a lot. It's very wordy, but they're saying people work from home. They can go to the suburbs or wherever they can kind of pick their spots or whatever. Um, but that was kind of the gist of it, and this gets into a little bit more of how the Fed does what they do. And basically, in a nutshell, it's saying that, let's see, bond buying program. Well, this is a little bit overly technical, um, but the gist of it is that some of this, the economy's been really good and stimulus and all this kind of stuff, and the economy's actually run hot. Let's see, with inflation well above 2% and a strong labor market, the committee expects, this is the Fed committee, expects it will soon be appropriate to rise the target range for the Fed funds rate. So what they're saying is, the economy run a little bit hot, and they got to actually cool it off. With the inflation and stuff, they got to cool it off, and how they're going to do that is they're going to raise interest rates. They're saying that it's actually pretty strong, and so maybe they've lowered rates too much in this, and now the economy, from what they say, is running a little bit hot. Um, just trying to find that part of it. Fed main ways of spurring growth, flooding the economy with stimulus, and keeping borrowing rates cheap are purchasing assets and cutting interest rates. All of that means Americans have the Fed to thank for record low borrowing rates and saving yields that they've seen since the start of the coronavirus, whether it's on their mortgage, auto loan, or savings accounts or CDs. But officials are sounding an alarm. They're running the economy too hot as consumer prices soared last year by the most since 1982, and that's crazy. That's the year I was born, so I just turned 40. And employers continue to complain about difficulties in filing open positions with inflation. So we already read this part. Um, so yeah, so that's about as clear as it gets. Notice has been served that interest rates are about to go up, and they could be up at a faster pace than we've seen in many years. Um, so that's just a little bit about what's going on. It's interesting to just kind of follow like the Fed and why they do what they do, what's going on with the economy, why is is it going up? Why is it going down? Why? How does the home market respond to all of this? So it's kind of a moving target where people say, oh, it's this, it's that. It's a little bit more complicated than that, and so and it's difficult to say, oh, well, this is going to happen, that's going to happen. Like as you see, like this is just part of it. It's kind of a big mess as far as how things are related and what's going to trigger this and that to do what when. So um, I hope you find that helpful, and yeah, continue to check me out every week. Come with more market analysis videos and just things that I see and come across just in the course of daily business. Um, Thank you for tuning in, and yeah, have a great week.